In this example, we are going to look at journal entries for purchases and sales using the periodic method. So the periodic method does not update your cost of goods sold, and it does not update your merchandise inventory account until the end of the accounting period, and it's actually done on the income statement. So the accounts that we're going to use are going to be a little bit different from when we learned the perpetual method. So when we purchased some merchandise on the 5th, we're going to use our account called purchases, which purchases is account. It's a cost that's going to show up on our income statement that helps us calculate our cost of goods sold. And then we're going to credit our accounts payable account and then further credit our supplier for Prestigious Jewelers for the $3,300 that we now owe them for the jewelry that we purchased. Then we also had to pay for our shipping charges worth $300. So that's kept in a separate account, freight in. It's still a cost of doing business, so it is also going to be on the income statement and is going to be used in calculating our cost of goods sold. And then we're going to credit cash for the $300 because that's what we paid out of pocket. Then on the 12th, we sold some merchandise. So we've learned that when we sell merchandise, we credit our sales account, and then we credit accounts receivable, and we further credit the individual customer account who we sold our product to. But then on the 15th, we returned some items to Prestigious Jewelers. We returned $700 worth of items. So we don't credit or decrease our purchases account. We use the contra purchases account, which will also be found on the income statement to help calculate cost of goods sold. So we credit the contra account for the $700, but then we also get to debit the accounts payable, showing that we don't owe that money anymore. Then on the 12th, we issued a credit memorandum. Our customer returned $900 worth of items to us. So for sales returns and allowances, you learned in previous chapters that we use a contra account, sales returns and allowances. We never actually decrease the sales account. And then we will decrease or credit our accounts receivable account and then further credit our customer account, Diamonds Unlimited.